From Wall Street's towering skyscrapers to Main Street's bustling shops, one question echoes in every corner of the financial world. What's next for the US dollar in 2025? What forces will shape its trajectory, and how can investors navigate the complexities of the currency market? These are the questions we aim to answer today. After a turbulent start to the year, the US dollar has experienced a notable decline, surprising many analysts and investors. Instead of resilience, the dollar has struggled to maintain its value, with persistent downward pressure reflecting global uncertainty and shifting market sentiment. Factors such as slowing U.S. economic growth, persistent inflation, and changing expectations around Federal Reserve policy have all contributed to the dollar's recent weakness. Recent U.S. economic data has fallen short of expectations, and speculation about potential rate cuts by the Federal Reserve has further weighed on the dollar's outlook. Looking ahead, many analysts now predict that the dollar could remain under pressure for the rest of 2025, unless there is a significant shift in economic fundamentals. This outlook is based on the belief that the factors driving the dollar's weakness, such as softer economic data and a more dovish Fed, are likely to persist in the near term. Why is the dollar struggling? Persistent inflation, despite efforts to control it, has eroded confidence and reduced the currency's appeal. The Federal Reserve may be forced to consider rate cuts sooner than expected, which could further weaken the dollar as investors seek higher returns elsewhere. As a result, investors are increasingly looking beyond the dollar for better opportunities, and its traditional safe haven status is being questioned in today's volatile environment. But the currency market is complex, and several factors could still disrupt the current trend, including unexpected economic data or shifts in global risk appetite. If U.S. economic growth rebounds or inflation is brought under control faster than expected, the dollar could regain some strength. Alternatively, if the Fed signals a more hawkish stance, the dollar might find support, but for now, the outlook remains cautious. For now, downward pressure is likely to persist, especially as other major currencies like the euro and yen become more attractive to global investors. The relative strength of other currencies will play a crucial role in determining how far the dollar could fall in the coming months. Of course, any sudden escalation of geopolitical tensions or a global economic downturn could still drive investors back to the dollar, but that scenario seems less likely right now. Still, ongoing risks, like trade disputes or surprise economic data, could create volatility and sudden shifts in the dollar's trajectory. While the dollar has often served as a refuge in times of crisis, its appeal has diminished this year as investors diversify into other assets. The bottom line, the dollar has gotten weaker this year, and while short-term rebounds are possible, the overall trend points to continued volatility and uncertainty. Most experts now expect the dollar to remain subdued, with only a major shift in U.S. policy or global conditions likely to reverse the current trend. The Federal Reserve's actions will continue to be the key driver of the dollar's performance, so investors should watch for any signs of a policy shift. For investors, that means opportunities and risks, requiring a careful assessment of the potential rewards and downsides associated with dollar-denominated assets. Investment strategies in global markets will remain closely tied to the dollar's movements, as the currency's strength or weakness can significantly impact returns on international investments. Therefore, keeping a close watch on U.S. economic indicators and Fed policy documents is crucial for making informed investment decisions. Staying ahead of the curve requires a deep understanding of the factors influencing the dollar's value. Stay tuned, stay informed, and as always, remember that the currency market is dynamic and ever-changing. And right now, the dollar index is trading below 100, reflecting recent market pressures and highlighting the ongoing volatility in the currency market. So keep your eyes glued to the data, analyze the trends, and be prepared to adapt your investment strategies as the economic landscape evolves. The key to success in the currency market is vigilance and adaptability. Please like, comment, share, and subscribe to Ahead of the Curve 1776 for more videos and assessments, and join our community of informed investors as we navigate the complexities of the financial world together.